Hello, this is Leroy Meadows, and welcome to the second session where we deal with process costing. And now we're going to look at, in this session, the weighted average method and the first in, first out method. Now, if you did not watch the first one and you do not have the concept of calculating equivalent units of work done, then you need to stop this video and go back over that, because that is critical, because without that basis you cannot really compute anything else from here on out. So go ahead and go back over that if you need to, and then come back to this video. So weighted average process costing method. Since we can do either weighted average, first in, first out, we're going to look at weighted average first. And it calculates the cost per equivalent unit of all work done to date, regardless of the accounting period in which it was done. Now, this will assign cost to equivalent units completed and transferred out of the process, as well as to equivalent units in ending work in process inventory. So the weighted average, how do we get the weighted average cost? Is taking the total of all costs entering the work in process account divided by the total equivalent units of work done to date. The beginning balance of work in process or prior period work is going to be blended in with current period costs. So let's say if I have beginning inventory costs of 10,000, current costs are 50,000, I'm going to get the total cost of 60,000 for the period, and then divide that by the equivalence of unit of work done in this period. So let's take a look at case 3, or the type of case here where we have both beginning and ending work in process inventory using the weighted average method. Let's say in the following month, and if you're following the illustration in your book here, January, we completed all the units we produced. There was no work in process inventory, so we simply took the total cost divided by the total output units. There was no ending work in process inventory. In February, for the assembly department, we had no beginning work in process inventory because there was no ending work in process inventory in January. So we went through the month, but we had work in process ending at the end of the period 225 units. So in February's ending balance is the beginning balance of the following month or the following period. So our beginning balance in work in process inventory is 225 units. And let me get this out here. And this is the work we started this period in March. We started 275 units. So remember that work in process beginning plus the units starting during the current period gives us our amount to account for. So I have to account for 500 units. Now either they're complete or they're incomplete. If they're complete, we put them as completed and transferred out during the current period. If they're incomplete, then they're ending work in process inventory. Once we account for the physical units, or we compute how much we have to account for, and we actually account for them, then in step 2, we're going to compute the equivalent units of production done to date in the assembly department. Remember that completed and transferred out during the current period units, they are complete with the direct materials and they're complete with the conversion costs, so those are 100% complete. With ending work in process inventory, we had those partially completed units. We're restating them as if they were fully complete. Now in March, we have the direct materials are added at the beginning of the period. So the fact that we're even working on them means that they are fully complete with respect to direct materials in that cost category. So we're going to take the 100 units of ending inventory, multiply that by 100% to get us 100 units. And with respect to conversion costs, we have 100 units in ending inventory, and we are halfway through the production process. So we're going to take that 100, multiply it by 50% to get us 50 equivalent units of production in ending inventory. So the equivalent units of work done to date, or the total equivalent units, is going to be the sum total of the number of equivalent units transferred out plus the units remaining in ending inventory. So for direct materials, we have 400 equivalent units transferred out, plus the 100 remaining in ending inventory. So we have 500 equivalent units of work for direct materials. For conversion costs, we had 400 units completed and transferred out, plus the 50 equivalent units of work in ending inventory. So my total equivalent units of work done to date, 450. Now again, these numbers are critical because these numbers here are going to go directly into the computation of cost per equivalent unit, which will then allow us to value not only the amount transferred out to the next department, but to value our ending inventory. So in the beginning inventory here, there's going to be costs associated with this. So we're going to take the costs associated with those 225 units in ending inventory. We're going to separate them by cost category, direct materials and conversion costs here. And our beginning inventory had $18,000 worth of direct material costs, $8,100 of conversion costs. So the total ending inventory was $26,100. And again, we got that on a previous slide here. From the end of the period before is our beginning inventory now. Now let's say throughout the March, we added in $19,800 worth of additional direct material costs. So now altogether my direct material costs I have invested in the product so far in this department, $37,800. That's how much in costs I have to account for. With respect to conversion costs, I had $8,100 of beginning inventory for conversion costs. So my beginning inventory had $8,100 of conversion costs. I added another $16,380 in the current period for conversion costs. So total conversion costs I have to account for, $24,480. Now, in step 4, I am going to take my costs incurred to date, these amounts right up here, and divide that by the equivalent units of work done to date here, which we computed right here, the total equivalent units of work done to date, not just completed and transferred out, we want the total here because we don't want to get a total cost of so the cost per equivalent unit of work done to date, take my total cost incurred to date divided by the equivalent units of work done to date. And that will give me my cost per equivalent unit. Now, just like before in the last video where I had no beginning inventory, I can take my cost per equivalent unit, multiply that, and let's just look at direct materials first. Multiply that by the number of units completed and transferred out to get the value of direct materials that's been transferred out. Then I'm also going to take my cost per equivalent unit and multiply that by the equivalent units here in ending inventory to get the amount of direct materials that's remaining in work in process. And that total will be $37,800 of total of direct materials that we've spent. So we've accounted for all those costs that we had to account for up here in step 3. Now let's take a look at step 5, the assignment of costs. I'm going to take that $54.40, my cost per equivalent unit for conversion costs. And first, I'm going to multiply that by the 400 units completed and transferred out. That way I know how much of that conversion cost I no longer have in our department. And so I'm transferring them out because those are no longer being in our books because those units are no longer in our department. They were transferred to the next department. So I'm going to send the units to the next department, and I'm going to send the related or the associated costs with them to the next department as well. Then I'm going to take my $54.40 and multiply that by the equivalent units in ending inventory, which is 50. Again, how did I get that? I got that right here. So when I do that, I will have total conversion costs accounted for of $24,480. And again, remember, my total cost to account for must equal the total cost accounted for. If there is a difference, then we need to look at something here. Now, under total production costs in step 5, this $52,000 here, total cost completed and transferred out. That's cost of direct materials plus conversion costs. So when I transfer this out to the next department, and as we talked about last time, the amount of work in process assembly will be transferred to testing. So what is my journal entry going to look like here? I'm going to debit the testing department, work in process testing for $52,000, because I'm transferring it from this inventory account to the next inventory account. And then the value, and then I'm going to credit work in process assembly. Then my balance sheet value for the assembly department is going to be $10,280. Those costs that still remain within the assembly department. And as you've noticed, when we go back over here, we have multiple work in process accounts. This is different than job costing. Remember, job costing, we had one control account and we had a whole bunch of different accounts, different jobs that all added, when we added them all up, all the subsidiary accounts equal the control account. Here, each process is measured separately, so we will have multiple work in process accounts. Versus job costing, we had one work in process account with subsidiary accounts. Here in process costing, we're not going to have necessarily those subsidiary accounts. What we will have is multiple work in process accounts. And depending on the number of departments we have, the number of processes we have to go through, we could have 2, 3, 5, and so forth. But the same thing between job costing and process costing is when they're transferred to finished goods, this is also known as what? Just to give us a refresher, cost of goods manufactured. And that represents the amount of work in process transferred over to finished goods. So, now, two critical figures rise out of step 5, and we just talked about them. The amount of the journal entry is right here when we're transferring goods to the next department. And then also the ending balance of the work in process inventory account that will appear in the balance sheet right here. So this is our balance sheet account. This is the amount transferred over to the next department. Now let's look at first in, first out process. A little bit different, so we're going to take this just a little bit slower here. We're going to assign costs of the previous accounting department's period's equivalent units and beginning work in the inventory process to the first units completed and transferred out. And we're going to assign the cost of equivalent units worked on only during the current period first to complete beginning inventory, and then to started and completed units, and then finally to units and ending inventory. A lot of work there. So here's what we're going to do. We're going to look at it here, and you're going to see something here where work in process beginning inventory and units started during the period 275 that equals to 500. So we're looking at March data and changing it and changing the value of our inventory. Instead of using the weighted average method, we're going to use first in, first out method. Now, for the completed and transferred out units, we're going to break this down into two categories under first in, first out. We're going to assume that the first units completed, or the beginning inventory, are going to be the first units completed. So if I have 200 and, let's see, we sold what? 400 units. The first 225 of those units are going to come from beginning inventory. And then the remaining 175 units will come from those started and completed throughout the process. And then our work in process is still going to be units started but not yet completed. So let's back up here just a moment. A distinctive feature between first in, first out is that work done in the beginning inventory before the current period is kept separate from work done in the current period. So the costs incurred and the units produced in the current period are going to be what's used to calculate the cost per equivalent unit of production. Under the weighted average method, the costs merge and the total units of equivalent production merge. And we're merging beginning inventory with the with units and costs of the work done in the current period. Whereas in first in, first out, we're separating those costs. We're only focused in on the amount of work done during the month plus the amount of costs incurred during the month. So let's take a look at our production report for using first in, first out. When we're calculating the completed and transferred out during the current period for equivalent units, we are beginning work in process at 225. Now to calculate equivalent units of production, we're going to take our beginning inventory first and then the units started and completed. And we're only focused on the work that we did this period. We do not care about work done in the previous period under first in, first out. Now, when those costs were transferred in, they were what? Direct materials were 100% complete for those units that were left over. So in other words, these 225 units already had all of their costs. Remember, the beginning units for the ending units for February were 100% complete for direct materials, 60% complete for conversion costs. So if let's look at that 225 that we did. Let's go back over here now. Out of that 225, these units were 100% complete already in the prior period for direct materials. So did we have to do any additional work for direct materials this period? Because remember, first in, first out is focused only on the work done this period, not cumulative with prior periods. So no, these units last period already had all the direct materials added, so we did not have to add any more direct materials. So we had a zero there. Now, for the beginning work in process, remember they were not complete with respect to conversion costs. They were only 60% complete. So how much additional conversion did we have to incur this period? And in this period, we had to convert the remaining 40% in order to complete those units. So I'm going to take my 225 units that were left over from the beginning period, multiply that by the 40% remaining conversion I had to do this period, and when I take my 225, multiply that by 0.40, I will get 90 equivalent units. So now I've accounted for the amount of work I've done from beginning inventory under first in, first out, because I'm only focused in on the work done this period. Now with my started and completed units, remember I transferred out 400 units. 225 of them came to be from beginning inventory. The remaining 175 I started and completed this period. So under first in, first out, the units started and completed. Well, they've got all their direct materials and they got all their conversion costs. So I take my units started and completed and multiply each of those by 100% to get 175 for both direct materials and conversion costs. Work in process. We have 100 units in ending inventory, and we're still going to multiply that by how far along in the conversion process are they. Direct materials, they're added at the beginning of the process. So if we're 50% away through the conversion process, which is what we're told in this book here, ending work in process is 50% converted. So we're going to take my direct materials, take the ending units in inventory, multiply them by the completion for direct materials. They're fully complete, so 100 units. And then we're going to take my ending work in process inventory and multiply that by the percentage of completion done in the current period, which is 50%. So 100 times 50% gives me 50 equivalent units in ending inventory. Now, to get my equivalent units of work done in the current period, I'm going to add up all three of these numbers here. The amount of work I had to do on beginning inventory, the amount of work started and completed, and the amount of work done already on the units in ending inventory. When I add those three up, I will get my equivalent units of work done in the current period. And I will do that also for not just direct material, but conversion costs. And this is where I'm getting my equivalent units of work done in the current period. Is here. I'm taking in the amount of work I had to do to beginning inventory, plus the amount of work I had to do here from units started and completed, plus the amount of work that's already been accomplished and has already been done to the units in ending inventory. And that will give me my equivalent units of work done in the current period. Now let's move on and let's go to step 3, 4, and 5. We're going to compute our beginning work in process. Remember, that was given to us. That was the amount carried over from the last period. We're going to add in for our production report costs added in during the current period. So we have our total cost to account for. However, under first in, first out, remember, I'm only focused on the costs added in the current period and the work done in the current period. So, unlike weighted average, I'm not going to take my total cost to account for. Under first in, first out, I'm only going to look at the cost added in the current period, which is $19,800. And I'm going to divide that by the equivalence of units work done in the current period, 275, which we figured up here in step 2. And then I'm going to get my cost per equivalent unit. Then assignment of cost, step 5. Completed and transferred out units, my work in process. Remember, I had $18,000 of costs in beginning inventory for direct materials and $8,100 worth of conversion costs in beginning inventory. Now, and that was my beginning work in process inventory as far as dollar amounts. Now we're going to add the costs added to beginning work in process inventory in the current period. So how much in material cost did I add in? None, because remember, my direct materials had been added in the prior period. What about conversion costs? Well, I'm going to take the amount of equivalent units done this period for conversion costs and multiply that by my cost per equivalent unit to get this dollar amount here. So I'm going to have the total here of $4,680 with the cost added to beginning inventory. So the total cost transferred out from beginning inventory is going to be the prior cost incurred plus my cost from beginning inventory that I added in. So my total beginning inventory costs are going to be $30,780. Now, what about costs added, started and completed? Take my 175 units that were started and completed and multiply them by their respective cost per equivalent unit. And then I'm going to calculate my work in process ending inventory, 100 units for direct materials times the cost per equivalent unit, and then my equivalent units in ending inventory for conversion costs of 50 and multiply that by my cost per equivalent unit of $52. So what is the value of my ending inventory? The value of my ending inventory is $9,800. So now I have to account for the total cost completed and transferred out, $52,480, plus my work in process ending inventory is valued at $9,800. My total cost to account for, $62,280. I've accounted for all those costs. The numbers match. I'm good. Now, let's compare this to the dollar amount transferred out under weighted average. And let's go back over here. The amount transferred out under weighted average, 52,000. The amount transferred out under first in, first out, 52,480. So we see the difference in cost assignments between the two methods. First in, first out, we're looking and focusing only on the work done this period to compute our cost per equivalent unit. The costs only incurred this period divided by the amount of work done during this period. So we're going to get a difference here in total cost of units completed and transferred out. So when I make my journal entry under first in, first out, same journal entry as far as structure, as far as what account is my debiting, what account am I crediting. The only difference is going to be the dollar amount. The other difference here is in the value of my ending work in process inventory. That's going to be adjusted because some of those costs have now been transferred out because of the valuation method we chose. We chose first in, first out versus weighted average. So now we've got that. So we've got a different dollar amount here. And so under first in, first out, we're assuming that all units from the previous period are the first ones to be completed and transferred out. So work in process is only going to consist of only the lower cost current period units. Whereas the weighted average method smooths out those costs per equivalent unit by assuming that more lower cost units are being transferred out and some higher cost units are remaining in ending work in process inventory. Now, with regards to management decisions, managers will use the information for process costing systems because they're going to make pricing and product mix decisions, and they want to also understand how well a firm's processes are performing. First in, first out provides managers with information about changes in the cost per unit from one period to the next, whereas remember, weighted average method smooths out those costs. Now, in a period of rising prices, the weighted average method will decrease taxes because cost of goods sold will be higher and operating income will be lower. And that's in a period of rising prices. And so the flip is true. The opposite is true. In a period of deflation or decreasing prices, weighted average method will actually increase taxes because cost of goods sold will be lower and operating income will be higher. But in a normal inflationary period, weighted average method will decrease taxes and cost of goods sold will be higher. So the choice of first in, first out versus weighted average will really be based on what is management's objective in producing the financial statements. If they want to lower their taxes, they will, in a normal environment of rising prices, they will use a weighted average method. But if they want to summarize the flow of goods as they enter and leave the company, then they will go to first in, first out. And then in that case, taxes will be lower or will be higher under an inflationary because cost of goods sold will be lower, but it's actually going to better summarize the flow of goods in the production process. Next time, we will be looking at transferred in costs in the next session here. So this is Leroy Meadows. If you have any questions, go back over and you're not sure about how first in, first out works versus weighted average, go back through this video here. Watch my example videos, which will be posted here shortly. Watch those videos to get a better sense of first in, first out versus weighted average method, okay? So again, this is Leroy Meadows. Thank you for joining me this session. Have a good day.